whatever
Every
you want
time
to
I
call
come here, we're ruining somebody's summer holiday.
it. We don't want to do that.
And yesterday,
Yeah.
I happened to be watching the market. Tells you what I like to do on weekends. But I watched as Bitcoin sort of seemed to fall off a cliff around 3:30 p.m.
Andy Baer talks about the flash crash in crypto after a whale reportedly moved $2.4 billion out of Bitcoin into other cryptocurrencies. He attributes it to a washing machine maneuver where liquidity is constantly moving in the crypto space. However, Andy still isn't concerned about the outlook for Bitcoin or Ethereum, the latter of which hit an all-time high last Friday. Don't forget to subscribe, like, and share, because I am here to help you know the market.
Welcome back to Market on Close. I'm Sam Bardas in for Marley Caden today here at the New York Stock Exchange. Let's discuss the crypto market with Andy Baer, Head of Product Research at CoinDesk Indices, joining me around the desk. And let's talk about what happened yesterday, because it was something a little bit random, interesting, strange,
Feels
weird,
like
whatever
every
you want
time
to
I
call
come here, we're ruining somebody's summer holiday.
We don't want to do that.
And yesterday, I happened to be watching the market. Tells you what I like to do on weekends. But I watched as Bitcoin sort of seemed to fall off a cliff around 3:30 p.m. Eastern time. And it turned out that a lot of Bitcoin was being sold by one account, by many accounts, a whale who was rotating out of Bitcoin into Ether. The timing of that trade was something many of us can't quite figure out. It doesn't make a ton of sense when Asia's asleep and Europe's in the Sunday evening time and the US is in a sort of summer afternoon to try to move that much, 2.5 billion of Bitcoin in those conditions. Ether had just touched its all-time high at 49.55, so that was within minutes of this starting to happen. So it's a little perplexing, but we do think that at least part of the move was a rotation out of Bitcoin into Ether to take advantage of the momentum that Ether has had over the last couple of months.
Okay, so the so-called flash crash, perhaps a little bit of head scratching going on there around that event. As you say, it could be in a little bit of rotation. But let's talk about generally broadening it out now to what we've seen as far as the price action in Ether and also Bitcoin. I mean, I'll let you take it wherever you'd like to take it. But I mean, you've seen Bitcoin coming off that high that it touched around the middle of August. It was at 124 levels. Ether coming off this morning. We did see a little bump post-Powell, obviously, with regards to that rally we saw across a lot of asset classes on Friday. But what do you make of the general sort of pullback?
Right now, it's a washing machine, right? There's fluids moving in a bunch of different directions. There's the impact of the digital asset treasury companies, the DATs. MicroStrategy, or Strategy being, of course, the first and biggest of those. MicroStrategy bought a bunch of Bitcoin over the last week, and that's sort of getting lost in the shuffle here. There are DATs on Ethereum and on other tokens, and the fast money seems to be chasing which of those DATs are going to get bigger and be accumulating more. Even though many called it a flash crash yesterday under just about the worst liquidity conditions you could manufacture in a 24/7 week, the market held it pretty well, right? 24,000 Bitcoin could have done a lot more damage in another environment, especially on a Sunday. So I think we held up pretty well. Remember, back in late July, 80,000 Bitcoin were sold in maybe a more signaled approach, and the market took that pretty well as well. So we have interest rates, we have what the Fed's going to do, we have what's going to happen with tariffs, we have demand from ETFs and from DATs, and we have general risk sentiment. All of that is swishing around right now, a couple of days before Labor Day. I think all things considered, the market's holding up pretty well. Less than 24 hours ago, Ether touched an all-time high. So I'm not that concerned.
You and I were talking offline just a second ago, and you sort of mentioned that perhaps there's just some other exciting things going on out there at the moment. Can you speak to that?
If it's on a weekend and exciting things are happening, it's
well,
not to me.
Pool.
I'm just staring. Yeah, that's right. That's a better place than staring at a screen watching Bitcoin flash crash. There is fast money trying to be one step ahead of where the next source of demand is going to be.
Right.
The digital asset treasury companies, especially when they're led by a charismatic or a trustworthy person, have done a great job of accumulating these assets for their treasuries. Money right now is concentrated on where that growth is going to happen next. We'll have to see how that asset class or that subclass of companies sort of evolves over the next couple of months. But look, the regulatory framework, the macroeconomic framework, risk sentiment right now is all very supportive. So investors we like to tell investors, think about index allocations rather than trying to pick tokens or time markets, because you'll get the best of the best stories. But we're heading into fall, and we'll have to just see what happens.
So what does this next leg of this trade really look like, do you think?
The thing that surprised me the most was that Ether moved just as much on the new rate expectations as Bitcoin. That's pretty significant, right? It's been an Ether-led rally all the way back since, let's call it April or May, right? Ether has more than doubled. It's eclipsed Bitcoin's performance. You'd think that Bitcoin would react the most to the Powell comments because it's the most interest rate sensitive macro asset, whereas Ether is more of a growth asset. Yet Ether participated as well. I think what we're going to see is continued breadth and continued leadership by blockchain names, not just Bitcoin. We always like to think of them as separate. So more breadth is always good for the market, for the asset class. As we get into a more growthy situation with more blockchain companies changing the way we do things, more breadth will continue.
Yeah, and I think the appetite for Ether certainly coming from the institutional investors because of the issuance of the stable coins. They need, obviously, the blockchain infrastructure as part of that. So we're seeing a little bit more sort of mainstream adoption in that sense. Just before I let you go, Andy, I just want to get your take on, obviously, this sort of flurry of IPO activity that we've seen. I mean, the next cab off the rank seems to be Gemini, but we also had Bullish and Circle, etc. What do you make of that as far as the timing? I mean, are they just sort of riding the wave of, I know you can't speak too much about it specifically, but I mean, just generally, the trajectory of this market right now.
Bullish was very excited to have its debut here on the New York Stock Exchange on August 13th. And I mean, there is no substitute for a New York Stock Exchange bell ringing. So we were very excited to do that. We're very excited about the times ahead. We can't talk much more about other IPOs, comparing it to ourselves, already forward-looking statements. But the asset class is in shape now to really make a big contribution to financial services in the United States. And it's a lot of the same people who are doing it in the traditional world that are doing it in the crypto world now. Great minds are going to meet again, and we foresee great things happening.